Welcome to our weekly Forex and Futures forecast. My name is Jay Norris. As always, we need to remind you that trading is a risky endeavor and not suitable for all investors. I've written a couple of books on trading which were published by McGraw-Hill and serve as the textbooks for our courses. Let's get right to the charts. First market we're covering is the Australian US dollar. You had a day-to-day shift lower last week, midweek. Right in here, you had your day-to-day shift lower, and you can see you had some pretty good downside since. A little sticking point at 103. You closed below it once. You couldn't quite close below it twice. From a short-term trader's perspective, swing trader's perspective, we're definitely looking to sell rallies here now. We can go scroll down to that 4-hour chart. You can see some resistance levels ahead here. We'll see if they get up to those levels, but we'd definitely be looking for sell signals intraday now. Given that shift of the day-to-day is down. Day-to-day pattern, very influential pattern. From my perspective, it's the most influential pattern if you're a shorter-term trader. So you have that day-to-day down, opens up the downside for dollar Aussie for swing traders, day traders, shorter-term traders. If you pan out to a daily, we have pretty good support, have a pretty good band of support, really from 101 down to 99.5. Keep an open mind, and we'll see how this guy trades lower. But for now, we're interested in shorter-term sell signals. We're still aware that your longer-term patterns are bullish, and there's a lot to be said for that. So we'll see how far this correction takes us. Potentially, we'll be looking for a longer-term buy setup somewhere in this zone. Let's see what happens. Oh, by the way, you only got one close below 103 too, so 103 is still a bit of a sticking point there. If you were to firm up and have some kind of signal, you'd have to take that seriously because it's in line with that secondary and primary. Next market, Euro US dollar. You had a pretty interesting week. You have a potential V-top, and here we're not quite in the camp just yet, even though longer term we're very interested in sell setups in this area just above the market. In fact, if we put in a double top or even some form of some type of lower high to that high, we'd be interested. For right now, however, this is still the highest high on the chart, right? So if you're still making higher highs as far as we're concerned, in fact, this is actually a higher low too, so pretty good turnaround for the week. However, it's still holding that bullish pattern, still has a bullish stance to it. You see that purple line? That's the 50% retracement of this last impulse move. See that? Up, down, 50%. Guess what level that is? Another 50%. You take that low to that high, that impulse move here, the impulse move in November, found support right at 50%. Here's another 50% level. That's the overall move. You take it from the November low to that December high, and you retrace that down just shy of 50%. So this market has a history of finding support on the 50% line after sharp corrections. So we understand the fractal nature of markets. We understand the repetitive nature of these formations. So we're still bulled up, so to speak, at least shorter term. Longer term, much longer term, we see pretty good resistance up above, and we've been talking about that. We refer to these levels up here as really the end game for this Euro rally. We believe longer term, if I scroll out to a weekly chart, we see this rather large rally from midsummer until currently now as a secondary move. We see this as a very large secondary rally with the primary pattern still being bearish. So overall, we're pretty excited about the potential for this longer-term secondary move that we're looking at on the chart here to start to top out and potentially swing the other way, swing south. But for now, though, we don't want to read too much into this correction. It's in other words, it's still in line with these other previous corrections. In fact, it's almost exactly in line. 50% correction here, 50% of the overall here, and now another one. So 50% common, okay? Nothing to get excited about too much. We'd have to see if it gave a rally and a double top. That might be something to look at, or a rally and perhaps a lower high might be worth looking at. But for now, there's still nothing for us to do with this guy. Here's the pound. Pound firmed up right on our risk tolerance threshold level. We talked about that last week where it overran the 618, but then it stopped right on our numbers there. You know, it's tough to hold short positions on top of a secondary threshold level like that, and that level held. So no surprise you got on top of support. If you're a shorter term trader, swing trader, you're still interested in selling rallies, but you have a pretty a pretty obvious area on the chart where you're going to take profit at or take your short trades off, and that would be that green line right there. 56, 56 and a half, a little bit below that area. So, we're still bearish from intermediate term, a short term perspective on the pound. However, you got a big bounce on our secondary level. That's no surprise there. Also, the short term primary's up, the secondary's still up too. So you may be starting to flatten out in the pound, and that wouldn't come as a surprise either. If I pan out to a weekly chart, you'll see you have a sideways market. You'll see a flat market, and really that's the pound's MO. He's been a flat market, but there, when you look at a little bit longer term, you start thinking, well, that could be a significant support level there. So pound kind of neutral. If you're a short-term guy, you're still looking at the short side. You're a longer-term player. You're very much aware that you're in a sideways market. So pound gave us a pretty good definition holding support, but going forward, I'm really not leaning one way or another, particularly when long-term you're on good long-term support held. Short-term, maybe you're looking at a little more downside. That's a little mixed up. I prefer when everything's aligned, when the long-term's in line with that short-term. Next market, we'll take a look at dollar-yen. The big runaway rally here, we're on record saying our upside is par here, so you probably have a ways to go still. It's gone up a lot quicker than a lot of people would have liked. You're actually getting a little bit of confusion coming out of Japan. Pretty much the ministers, other than here and there, they're all on the same page that they're all for a weaker yen, a stronger dollar yen, but now some of them are a little confused. They're saying, wait, a little too fast, a little too soon. You had a big turnaround on Friday. This is a daily chart. Let's drop down to a 4-hour chart. You had a pretty good turnaround here. On the other hand, it's, we see this as a secular bull move. Hey, we'd love to see a correction, maybe take this guy down back to 90. I think that'd be a good level for it. But I don't know if that's wishful thinking. Certainly you look at the charts and you think, well, it's due for a correction. Yeah, but you can't trade off it. It's saying it's due for a correction. So tricky market here. As always, trading, definitely, risky endeavor. It's not for everyone. That's what we mean when we say that. You get yourself in trouble with this guy. But I'd need to see at least this low. You take that last impulse move. If it can retrace by more than 100% and close below that level, then I think that opens up the door for a shorter term correction. I wouldn't want to play it from the short side just yet, though. I'm more looking at it from a longer term perspective here, kind of hoping you get a correction. And then I'll be looking for buy signals back in line with that secular bull market that we're in here. Hey, let's take a look at the gold market next. A lot of indecision in gold. We're kind of bulled up. We were bulled up just ahead of 1650, and we've dips in it also. That same level's been holding all week. But you know what? You're just not getting the push. I don't know whether this back and forth we've seen for the last week or so. I honestly, I don't know if that's distribution or consolidation. Because it's in the middle of the chart, I would tend to think it's consolidation. If it is consolidation, that would be bullish overall. If it's distribution, however, that's not so bullish. I don't know. I think if we pan out to a daily chart, and you've got to make your decisions on, you got to pick a chart, and a daily chart's a pretty darn good chart to pick. As far as picking that pattern, of course, we believe strongly that the pattern we see on that daily chart is a reflection of underlying fundamentals. So underlying fundamentals going back to the fall don't look so positive for gold. This is not a positive chart at all on the daily. In fact, you have a pattern of lower highs and lower lows. We have to respect that. So there's cause for concern now that 1660 held. You couldn't get out above 17 even. So longer term, I think you have to be a little bit disappointed with this market. Well, I should say intermediate term, you're a little disappointed with gold. Here's what I like about gold long term. You finally attracted the right kind of money that a market needs to see sustained movement. And I think it may be apropos that so many of the gold bugs are really, they're the ones that are really disappointed. I hear a lot of people talking about their long-term bulls, gold bugs, committed gold bulls. Really, they're not enamored with this market at all. They're kind of disappointed. And I think it's interesting that your long-term gold bugs are starting to throw in the towel right when people like me are seeing gold as, hey, I finally see this as a legitimate market now because, well, not only because institutions have to include gold in their portfolios, at least some percentage of it. Even a small percentage in the institutional account in a pension fund means that they're regular buyers of gold. Not just that, that's been the case, but now we're seeing it's very easy to put gold in 401ks for individuals. So you're seeing Fortune 500 employees putting gold in their 401ks and their IRAs. That's what you want to see. So longer term, I see that as a positive in the gold market. I think gold is something that if you can get it at cheaper levels, you can even consider dollar cost averaging because that's what people are doing in their 401ks. If an investment becomes a favorite for the 401k market, that's hugely bullish for it. Hugely bullish for it. Here, I'll show you another market coming up next, the S&P 500. That's a big favorite. So I'm not that disappointed in gold. If you can get it down around 1,500, that'd be nice. That may be a pretty good size move, pretty good clip. We may be looking at that possibility. And I know gold bugs don't want to hear that, but that could be the case. So I'm not that scared of a gold sell-off. I would see it as a positive. I would see it potentially as an opportunity to put some gold in a long-term fund or consider it a longer-term investment. Next market, stock market. This market is definitely a huge recipient of 401k flows. Everyone talks about the unemployment. That's very important to us, but even if you had 8-10% unemployment, you still have over 90% of your workers working. People working. So I want to know those 90% that do have jobs, where are they allocating their investment flows, their savings flows, and a lot of them, it goes right into the S&P 500. That's one of your most popular choices for 401ks, for IRAs, for investment in savings vehicles, and you can see this chart definitely a recipient of that. So there's a lot of people out there talking about, I get this a lot too, hey, you think the stocks are topping out? You think that the market's going to top out? Hardest thing in the world is to predict corrections in markets. It was showing, if I go the 4-hour chart here, it was actually starting to show some indications of distribution. You could see it there. Anytime a market has a good rally and then it just starts get these wide swings back and forth, generally that's distribution. A lot of professionals coming out of there, a lot of amateurs jumping in at the wrong end of the move. So I was starting to think, yeah, potentially maybe have some distribution that's a harbinger of some kind of a correction. Doesn't even have to be that big of a correction. However, then you broke out above that range on Friday or late last week, and that's the stock market. That is the stock market. You're not going to get a top in a market when everyone's asking, hey, is this market going to top? It's just funny how that works. Obviously not as enamored with the S&P 500 up here as we were back in here and back in the summer too. But it's awful hard to pick a top in a market. You don't want to do it. Awful hard to try to predict when you're going to get a correction in a market. Likewise, you don't want to go there. So, hey, we'll stay on top of this and we'll keep bringing it to you. If you want to know more about what we do on the education side of the business, there's our website, trading-u.com. You get an awful lot, and you can pay that low monthly rate too. You can opt out at any time. Or if you're interested, you want to move along a little faster, perhaps, if you open a live account with Forex.com, FXCM, Handtech, or Future Side Open eCry, you can receive the Masters Trading Program for free. For details of that, go to eostrade.com. Thank you so much, and we'll catch up with you again next week.